Hey everyone, Frank Verney here. Welcome to another edition of Real Estate Help by Frank. The Sacramento housing market is starting to slow down and catch its breath. I've been saying for a few months that this was probably going to happen since prices shot up over the last 15 months faster than anyone predicted. This was caused by a tight supply of homes and heavy competition from investors and home buyers. As interest rates have also quickly spiked up from about 3.4% to currently about 4.6%, there are now more homes that are on the market and price increases have slowed down. Now, with the rising prices, many homeowners smartly put their homes on the market for sale. As of August, more than 2,500 homes were listed for sale in Sacramento County, up from a low of less than 1,000 at the beginning of the year. Wild price increases, meanwhile, have slowed down since it peaked in the spring. For several months this year, the median home price in Sacramento County rose by about 8% a month, an incredible figure. In June and July, it only went up by about 2.5% each month, and it appears to be about 1% for August. The flattening prices are happening somewhat because buyers can afford less, and some who were lured to the market mainly by the ultra-low interest rates have left. Lately, cash buyers and investors have also been leaving as the prices rise. They once dominated the market, but have declined as a percentage of all sales from February through August. And just this week, the National Association of Realtors announced that pending home sales of existing homes dropped last month by about 1.3%. Only a few months ago, homes hitting the market had multiple offers within a matter of days or even hours. The current average is approximately 25 days on the market. Buyers with traditional financing express frustration at seeing their offers rejected time and time again, but now it's become easier for them because of less competition, and they stand a much better chance of getting their offers accepted. Now, part of the change is the typical slowdown that happens in the fall as children return to school and the spring and summer buying season comes to an end. At the end of August, the market had about a 7-week supply of inventory. At its low point, inventory dropped to a little less than a 3-week supply. Now, anything less than a 3-month supply is considered a seller's market, and 6 months of inventory is a good balance between buyers and sellers. But even with all the recent changes, sellers still have the advantage and might want to consider selling now. Buyers, on the other hand, might want to consider buying now before interest rates climb even higher, which they probably will in the coming months. So if you or someone you know are considering buying, selling, or can use help in any real estate matter, contact me, Frank Verney, and I'd be happy to answer any questions. If you found this interesting, please forward to someone that can use it or share on your Facebook page. I'd also appreciate any comments below or subscribe on the right for further updates. I'll see you again soon. Thanks and good luck.